Well, being the late show is never good, but what I'll use the next 30 minutes for is basically to talk about why volatility is low and why we probably are in a place where we can only see improvement of market conditions. I will say that most often I'm introduced as a very negative guy, so much so that most people introduce me as a guy who has predicted the 5 of the last 2 crises, which of course is never a good thing. So I'll say this time I'll begin in a different way. I'll say that for the first time in my career, I'm extremely positive for the next 10 years. I've probably never been more positive about the markets, about foreign exchange and volatility. But I'm afraid it's for the wrong reason, simply because it can't get any worse. We are living and that's very appropriate being in Asia's Las Vegas. We are living in a David Copperfield illusion show where the wand he's using is the monetary policy and the car he makes disappear on stage is the debt. So one of the major reasons and one of the major things we have to deal with inside the next 2 years is either that we go to a Japanization where we have 10, 15 years of no growth. This industry will have to go lower and lower in order to get some volume and velocity. Or we get some sort of a breakdown that leads to a better tomorrow. Fires forward if you want. So I hope a few of you can remember the movie Wag the Dog. It's Dustin Hoffman who decides to create an artificial enemy of the US. He gets into the press and the press continues to print this image of someone being at war with the US. This is exactly the same picture the monetary authorities, the policymakers of the world are having. They're all telling us that if it didn't do this, the world would be in a much worse place. The prior presenter was very proud that China has the biggest monetary base in the world. Where I come from and where I was educated, that's actually not something you brag about. That's something you keep very quiet. But having said that, I think we have a number of issues. One being we have an illusion against the reality in terms of the perception of the world. We have, interestingly enough, today, this morning, yesterday, as 5-year high in the stock market. But at the same time, we also had the highest unemployment in history in Europe. We have falling export volumes from most of Asia. And despite everyone here likes to talk about how Asia is a new growth area and how the rising middle class is going to offer 70 million accounts of foreign exchange in China, there is a number of issues which I will touch shortly on, which is problematic in my opinion. Then we have the micro against the macro. As you know, in Asia, most of these, and in the Middle East for that matter too, most of these states' economies are state-driven. There has never in history been a real handover from the public sector into the private sector, which is actually what the whole world needs. In an average year, I go to 14, 15 countries in the world, all over the place. They have different economic theories, they have different economic conditions, different starting points, but none of them are willing to reform. If you think about it, who was the last politician in European history to be given and taking a mandate for change? Who was the last politician who just didn't talk about doing something but actually did it? I can see we are overrepresented by men here, so you should know it's not you, it's not one of you guys. It was 1979 and it was Margaret Thatcher. And it's not that I condone everything Margaret Thatcher did, but she did actually fight the unions. She took over what at the time was the segment of Europe, uncompetitive, huge unemployment. Do you recognize some of the parameters here? Another thing is that, talking about our favorite, most traded currency, the euro, everybody says that it has been created such that people cannot leave it, which I find kind of interesting when you consider that the Kingdom of Spain has been bankrupt 14 times. So having a new beginning for an economy is actually a major part of how they survive. The Swedish economy today is one of the strongest in the world. and also one of the few economies that's been allowed to devalue their currency inside the last 10 years. The very favorable EMG BRIC countries have one thing in common. They have all bankrupted inside the last 50 years. So maybe the fact that they have had new beginnings is why they're in this situation. Another thing is that 1979 was when Margaret Thatcher was given this mandate. That's 1 generation ago. 1 generation. Have you ever met a 34-year-old that didn't make any mistakes? Have you ever met a 34-year-old that didn't have a crisis of mind, coming from being the young person going out drinking to 4 in the morning? And here I know I'm talking to the wrong audience, because whatever age a foreign exchange trader has, he still goes out to 4 o'clock in the morning. But, you know, the average guy doesn't do that. The average 34-year-old person needs to think about the future, pension, kids, you know, maybe even making the wife happy. So 1979 is very significant. Also in Asia, because in China, Deng Xiaoping started the Big Mac South in 1979. So the Chinese experiment of an open, slowly opening economy is also 1 generation old. And in my opinion, one of the major issues we have in terms of growth in the world, and one of the major overestimations we have in terms of what will happen to the Chinese economy and Asia over the next 3 to 5 years, is the following. China has been the most successful economy over the last 34 years, no doubt. But they moved from being an agriculture economy to being a similar industrial nation. Ladies and gentlemen, that's the easy part, because in that path you take low labor costs, huge capital, infrastructure investment, and you generate growth of 8 to 10%. In Africa right now, a country like Mozambique, who has no infrastructure, is beating the growth rate of China. Just to tell you, it doesn't take much when you start at a very low point. For all the success of China, they need to do 3 things, which I think is not implementable in the short term. First of all, why are the Chinese saving between 30 and 40% of their savings? Because there isn't a healthcare system. There isn't a security model. So in order to have this phenomena of the domestic growth being increased, we need to create a domestic healthcare solution for the Chinese. This is a planned economy, with all due respect. Do you think that will happen inside 3 months, 6 months, 9 months, 12 months? Of course not. Then we have the huge corruption level. I used to live in the US. I got pretty fed up with every time you passed a door and a person, he had his hand out. Until I came to China, of course, where they have 2 hands out. Nothing wrong with that. That's part of the evolution. The problem is, of course, that in order to reduce the corruption, you can only do that in reality by introducing competition to the domestic market. It will happen in China. Will it happen in 3 months? Will it happen in 6 months? Will it happen in 9 months? Absolutely not. And most relevant for this audience, 70 million people will trade foreign exchange. I think Andy Wu said it very correctly. There is a bigger demand than there is supply. There are good reasons strategically for the Chinese authorities not to free everybody up. Imagine right now maybe 1 million people can trade. If everybody was allowed, next day there would be 70, for 1 to 70. Imagine the registration forms you need to fill in, the paperwork. I know you could deal with it, all of you, because you are very capable, very beautiful, very sexy people, so you can do that. But of course, for a planned economy, that's not what you want. We saw small samples of that a couple of years ago when they opened the doors slightly, and they got overwhelmed by the need for this. With the rising middle class, you need investable instrument, first of all, because right now, if you're a Chinese domestic investor, you can invest in 3 assets. You can invest in a bank account with negative real rates. You can buy a stock market. Let me be diplomatic, which most days are manipulated. You can invest in an inflated housing market. And China, and I think China understands it. I mean, none of these things I'm raising are new to the management of China. It's nothing new to any Asian country, because this is the same China as it is in South Africa, as it is in a lot of places. Again, don't think this is China specific. The problem is, however, the world has become dependent on China being the growth engine. So the first thing I will offer to you in this little 30 minutes around the world thing is that I don't think China will contribute positively to world growth, because when you come from a 10% to a 6% growth, then you have a negative velocity of growth. You would contribute with a drag on world growth, first of all. I advise a lot of corporate companies, and I tell you, everyone has a strategy for China, but no one makes money on it. So that's another observation I'll make privately. So China is slowing down. That in itself is not a concern, because think about it, in 2006, the biggest problem in the world was the global imbalance. The fact that everything in the world was produced in Asia and consumed in Europe and in the US and was fueled by what came out of the Middle East in terms of energy. But right now, the US is producing electricity at 10-year low prices using their excess supply of natural gas and shale gas. We have had the biggest paradigm shift in my almost 30 years in the business in the energy sector. I think first lesson from here, if you take anything away, is that China will underperform relatively to the US. It will mean an increased amount of reshoring of jobs out of Asia into the US. You can today produce aluminium cheaper in the US than you can do it in Asia with subsidized prices. Why? Because you're doing it with natural gas at 10-year low prices, and you have a huge excess capacity plus relatively higher skilled workers. So a lot of companies are already moving back. In the aluminum industry, 25% of your cost is energy. So anything that has any level of energy intensity can now be produced most competitive in the US. So we are rebalancing, we are losing growth relatively in Asia. That's not bad for an economist. It may be bad for someone who's responsible for Asia. But it's good for the world because we rebalance, we get more in line. Lower energy prices will probably be another phenomenon. I think we have peak demand in oil next year, and we will move into a cycle where the net contribution, the net new investment we can generate despite lower maximum speed to the world economy will come from additional savings. You can call this phenomena less is more. But for the few of you who hasn't taken an economics degree, I will now offer you 5 minutes of economics, which took me 7 years. Actually, it took me 28 years to figure out, but you will get it for free inside the next 5 minutes. Everything macro, meaning everything central bankers, policymakers, politicians, and chief economists says and do, is per definition wrong. The whole concept that I can stand in front of you pretending that I know what will happen tomorrow has been proven again and again, of course, to be very, very both futile but also absolutely impossible. But everything positive is micro. The individual's ability to adapt to the crisis, the individual's ability to reduce his expenditure as he loses salary, and the concept, think about the S&P 500. What is it really? It's 500 companies that open doors every day to lose money? No. It's 500 companies that opens doors every day to make money. The S&P 500, excluding financials in 2012, had a return on equity in excess of 20% and an economy growing at less than 2%. So the individuals are able to deal with crises, states cannot. So without any modesty, I've created Steen Jacobson's crisis model. It has 3 phases: denial, protest, and mandate for change. To explain this, I will use tonight, or if you were at home, you're at a party, you tell your wife you're going to be home at 10 o'clock. Being a foreign exchange trader, of course, you're going to be home at 12 at the earliest. Your wife meets you at the door. Stone cold, you can see the frost coming from her eyes, and you go, she said, you had an agreement, you will be home at 10. First thing you do, what is that? You deny you're late. I didn't really say I was home at 10. I said, around 10, and I have big numbers, so 12 is reasonable. And by the way, I'm an independent man. just feel the temperature in the room is collapsing. The wife is going nowhere. So then you go on to protest and say, listen, this afternoon I had to listen to this stupid Danish economist. He was so depressing that I had to get absolutely smashed at the bar. And in the process, I lost my way, I lost my keys, I lost my money, so I had to borrow some money, blah, blah, blah. You go on. And there's just no reaction on the wife. And then you do what you should have done in the first place. You should say, I'm really, really sorry, I was late. And by the way, that dress you saw the other day, aren't we going to go buy that tomorrow? And how you look so beautiful today, wife. So the phases are, first we deny, then we protest it, and then we do the mandate for change. Unfortunately, in politics, we continue to flip between denial and protest. So when you do this in government speak, first you deny there is a crisis, because if we go to church on Sundays and pray, everything will be fine in 6 months' time. Kicking down the can phenomena, of course. Doesn't work. So what we tend to do, at least in Europe, we throw out the government, the new government comes in and says, we would like to spend the money we don't have. So instead we're going to print the money we don't have. Doesn't work either. And that's where we are in the world economy today. We're somewhere between we tried everything that was in the box. We tried to pretend that it worked, but it doesn't. The mandate for change needs to come. But have you ever met a politician honest enough to say he was wrong? I mean, Greenspan was wrong for 25 years, and he never admitted anything. If anything, he's touring the world right now telling everybody how right he was about everything. So politician doesn't change. We need things to collapse. So when I say every single change that's done to the EU's constitution, treaty, have been done when we had high interest rate or collapsing stock market rates. So the only way we get crisis in history is through a major crisis of some sort. In Europe right now, the biggest risk is probably a social tension. If you go to Spain, we have unemployment in certain areas that are higher than they are on the Gaza Strip, maybe not exactly the place you want to compare yourself to. We have, 25-year-old people living at home, 35-year-old people living at home. So what I want you to leave with, I skip some of these to get to the important part, is that when I'm saying to you we need a crisis of some sort, maybe a social tension, you say, but that equates to a war. The funny thing, of course, is that if you look at the economic numbers from an economist's point of view, we are at war. Look at this chart. This is the GDP in the US. Do you know last time the numbers was this bad? It was during World War II. So we may not be fighting in the trenches, but we may soon be fighting in the streets again, or at least economically, we have to fight this war, which in my opinion is 50, 60, 70% in our minds. We are DEFCON 5 at all times, despite the fact, as investors, you never had greater opportunities. People are, overbuying bonds, sell the shit out of it and get involved in something else. Intermediation of credit has never been better in history. You can get paid 11, 12, 13, 15 to fund companies who has been profitable for the last 25 years, but the banks are stupid enough not to lend them money. There's so much opportunities in the marketplace right now that we need to do it. But let me just say to you, and once and for all say, the concept that printing money is for free is the greatest David Copperfield illusion you have. The chart up there shows the disposable income in the US, what you have left when everything is paid, has been going down for the last 4 years. That goes for US, it goes for UK, it goes for Denmark, it goes for China. Why? Energy prices, cost, indirect taxes goes up. The only thing we know about printing money from an economic perspective is that if you double the amount of money in circulation, everything else has to go up in price as well in order to create a new equilibrium. That's what's going on. So you may be happy looking at your account statement saying that all the losses you had in 2007 or all the profits you had in 2007 is now back on your books. The only problem is that when you convert that into real Hong Kong dollars or renminbi or whatever, you can today buy 25% less with it than you could in 2007. So that is the illusion you're living every day. The other illusion is, and the other tax we pay by this is that this chart shows the US growth rate. And as you can see, it's been coming from a maximum speed of 8 to 10% to less than 2.5% as the debt has increased. That's where the world is today. The countries with debt, their maximum speed is barely positive. In Europe, if we have tailwind, if we are going downhill, if we have all the advantages of the world, we can probably get 1.5%, 2% growth, where we used to come from 3, 4, 5%. So as we continue to just extend and pretend and refuse to acknowledge that debt is a huge burden that needs to be dealt with, we continue to take the world to a lower growth rate. Again, the only way we break this negative cycle is to have some sort of a stress into the system that cleans it out instead of set us on a new beginning. Again, disposable income and the other thing falls apart. And in terms of everybody's overweight China right now, because, and I find it interesting to, having been in the market for, say, 28 years, that last year when China's stock market was collapsing, I didn't see any macro guy talking about how negative it was for world growth. But as soon as the Chinese PMI stabilizes, this is the greatest news since sliced bread. We live in the most simplified, homogeneous, average world we ever live in. You as a group of people are the most average in history. You feel very different. We have a lot of nationalities here, but you have all the same trademarks. You all have an Apple thing, a Samsung thing. All the women have a Gucci thing. You all wear the same ties, the same perfume. I travel to these 15, 16 countries in the world. I can't tell the difference between Macau and Las Vegas. I can't tell the difference between a shopping mall in Dubai and Las Vegas. I mean, it's all the same. We've become the most average in history. We have no desire to be outside the norm, outside the mainstream, because, what should we do? We actually have to think about something. We have to say something, which is, our own thoughts. And you can say, now I'm like making fun of you, and that sociology-wise is a problem, of course. But the real problem, again, is not the sociology part, and you a bunch of sad people, but foreign exchange traders are all that sad. I mean, I've been there for 28 years, so look at me. But the sad thing is that growth comes from diversity. It comes from the fact we have the odd existence on the left-hand side, the right-hand side. We are able to think outside the box. And when all due respect to our industry, but when I look at what we have new, so-called new products out there, ladies and gentlemen, they were there 20 years ago, they were there 30 years ago. So you may call them new, but for an old dog like me who's been around for 28 years, we have gone nowhere. I mean, I can only think of one industry that's worse, and that's economics. Unfortunately, I'm now involved in both. So we need to think also for this industry, we need to give it, good kick and get outside the box, because right now we seem to be doing regulation arbitrage instead of product innovation. I hope we change that, because I think the trend is very concerning. With China, overweight, why? I just told you why they're not going to grow really, and when the numbers, again, doesn't lie. The growth volume from China is at 2008 levels. They are not exploding. The PMIs are not going through the roof. They're stabilizing. But in this world, we only accept positive news. You're being manipulated like you are at a David Copperfield show to think the car is not there despite knowing because you're smart enough. It is there. The debt is there. There's no innovation in our industry is also a fact. And we can just deal with that. We can live with it because we can probably live happily for another 3, 4 years with it, but we're going to die if we don't change as an industry, as a whole globe. So in closing, I'll say, I mean it when I say I'm extremely positive about the world. We are, there was once a movie called The Constant Gardener, which he was a gardener. He became very famous on Wall Street because he said one thing. He said, after winter comes spring. And he kept saying that, and all of a sudden that became sort of he was predicting that the market would go up. So I'll say to you as a closing, This is in the depth of the winter, maybe not in Macau, but I tell you where I come from in Denmark, it's pretty cold right now. So we are in the winter because we never had worse politicians. We have never been more average. We've never been less willing to do the mandate for change. And we have never ever seen such a big monetary experiment. But the good news is, an economy with so much non-markets, with no price discovery, with no allocation of capital to the highest marginal utility, means, per definition, it can't get worse. So, as I said, maybe you think I predicted 5 of the last 2 crises, but for now, I'm the most positive I've been in 20 years, and I mean it when I say I think inside the next 18 to 24 months, we will have the turning point economically, but also in terms of equity coming back, volatility coming back to a normal level, because the death of volatility in the FX has been pronounced at least 5 times in my history as a foreign exchange trader. Don't believe it, but on the other hand, don't stay average. Thank you very much.